Hi there, I'm Michael Bovee with Consumer Recovery Network. Thanks for tuning in to our YouTube channel, DebtBytes. Today I'm going to continue on with a video in our pros and cons series and talk about consolidating your bills, or debt consolidation, using a nonprofit credit counseling agency. Oftentimes these are called debt management plans. So first off, before I go into some of the pros, the credit counseling industry is pretty large. There's over 100 companies, a lot of them national. Credit counseling is probably the most popular non-confrontational way to resolve your bills. If you call your bank and said, hey look, I don't know if I'm going to be able to afford my payment next month, things have changed, I've lost hours. Banks actually refer you to these agencies. They'll give you a toll-free number and you'll be kind of randomly pushed out to one to consult with. It's free, so it's worth a call to do and see if you can benefit from some of the following pros. The first benefit of a credit counseling debt management plan or consolidating through one of them is that you get a lower monthly payment from interest rate concessions. When you're on the phone doing a consultation with a certified counselor, they're going to be inputting information, asking you, income and expense questions, so be prepared for that. And they'll input that in their computer, and the computer is already preset with some information from the creditors that you have that participate in these plans that is going to spit back to them, what lower monthly payment they'll accept. So you can actually, legitimately, you could get an exact to the penny quote in one phone call as to what that lower monthly payment will be. Another benefit is that you only have one monthly payment for all of the, let's say you have 5 accounts that are enrolled into this bill consolidation. You now add up what they reduced it down to on all 5 cases, all 5 accounts, and you send that one amount to the credit counseling agency, and then they split it off and send it out to your creditors that are participating in the consolidation. So that can make ease of and simplicity of managing your bills, so that's a benefit. You have a fixed payoff time. These programs, the consolidation programs through the nonprofit agencies, are regulated, heavily regulated. One of those regulations is that their plans cannot last more than 60 months. So you have a light at the end of the tunnel and it's 5 years long. That's it. When you look at your credit card statements, for example, today, and it will tell you that, hey, if you continue to make minimum payments on this balance that's owed, you'll be paying on this account for 22 years. Literally, I mean, it can take that long. That's a much longer tunnel. So bill consolidation allows you to shorten that tunnel, that time frame for you to get out of and be free from credit card debt, for example. Credit counseling allows you to preserve your credit. Okay, so much like I talked about in the pros and cons video of debt consolidation loans, debt consolidation through the nonprofits, it's not a loan, just lowering your interest rates through a prearranged plan. It doesn't impair your credit score, right? It's not going to drop your score, and it's going to preserve your credit. There are some cons to this aspect, right? So it doesn't hurt your credit on a forward-looking basis. It actually can re-age your accounts. But I'll get to the cons in a moment. Just realize that unlike bankruptcy, Chapter 7, Chapter 13, or falling behind so that you can later negotiate lower balance payoffs with your creditors and debt collectors, credit counseling, this form of consolidation doesn't impair your credit. You can eliminate fees. Okay, so assume for a moment that you've got those 5 accounts and you're late on 3 of them to the tune of 60 days. You've got over the limit fees maybe because of the you were already maxed out, and the first month you missed a payment, you had a late payment fee that put you over the limit somehow, and so now you've got a late payment fee and an over the limit fee and now 2 months worth. A lot of the times when you work through one of the nonprofit agencies to consolidate your bills, creditors that participate in these plans will waive those late payment penalties, all those fees and everything. So there's a benefit there. And then of course, when I said re-age a moment ago, this is what I meant by that. If you've missed 2 payments to, say, Citibank, and it's showing on your credit report as 60 days late, that doesn't necessarily go away. That's not what I'm saying. But it is re-aged to the point that your very first payment from the credit counseling agency that's pushed out to Citibank is part of this agreement. That will stop, even though you didn't make up those other 2 payments that you missed. It's not going to report as 60 or 30 days late in perpetuity. it re-ages it just with that one payment to the counselor, not making up the arrears. So in other words, it's not impairing your credit on an ongoing basis, which is actually pretty important. Okay, and one of the other benefits of working with one of the nonprofits is that their fees are pretty reasonable or even non-existent. They get their nonprofit status from the Internal Revenue Service, from the IRS. So they don't pay taxes on their income, their revenue, and with that, it's a quid pro quo. They have to do something to meet that standard to be a nonprofit with the IRS. And in this industry, the debt relief industry, that means providing education, free resources to consumers. They have to consult with you for free. So when I said call that toll-free number and press 1 to talk with a counselor, it's always free because it has to be free because they're a nonprofit. So the price is right for a lot of people if you can't afford to pay, but you're on that margin where you can still afford your bills. In some instances, there are no fees. And even the fees that they do charge are typically much less than other debt relief options like debt settlement. One of the other benefits of working through one of the nonprofits and consolidating through them is that there's an agreement there, right? Everybody in the plan agrees, as opposed to some of the other alternatives that, you know, if you can afford credit counseling, you can avoid having to do debt settlement, which means having to deal with tons and tons of debt collectors, debt collection calls, debt collection notices, and all of the stress and whatnot that comes along with that. If credit counseling or this form of consolidation makes sense for you, it's really cool that you don't have to deal with some of those stresses. A couple of other benefits of the consolidators, the nonprofits out there, that may not necessarily be related to debt consolidation, but I should bring them up, is that they do some counseling as it revolves around student loans. They do provide counseling for pre-purchase home buying, and they're a requirement in working through a nonprofit online or, you know, calling that hotline, same thing if you're filing bankruptcy. You can talk to a counselor and meet your requirement for the bankruptcy trustee to accomplish your pre and post bankruptcy counseling. So most of the nonprofits have either offer that or can give you access to that. I want to move on to the cons, some of the drawbacks to debt consolidation or bill consolidation through the counselors. When you call and talk to a counselor, you have to qualify. Kind of like what I talked about in debt consolidation loans, pro and cons. You have to qualify, you have to have credit score, debt to income ratio, so on and so forth. Here it's kind of the same, only it's not a loan, right? So it doesn't matter about your credit score, not a bit. It doesn't matter about necessarily your debt to income per se, it matters about your monthly cash flow. And here's what I mean. You cannot qualify for a credit counseling consolidation plan if you do not have enough money to meet your minimum payments on all of your debts, okay? If your banks are not going to want to enroll you in something where when they do that exercise with you over the phone, it shows that you can't afford to pay even the minimum, then that they can reduce it down to, you're not going to qualify. So there's a qualification. Actually, I got to tell you this, from my perspective, being a debt relief expert and doing and working with consumers for decades now, I kind of think it's a plus. So credit counseling fits in a box, right? You either can afford it or you can't. And if you can't, you can now eliminate that as an option, and it helps you move forward in kind of a process of elimination that I'm a huge fan of, starting with talking to a credit counselor. If you can't qualify, talking to a Chapter 7 bankruptcy attorney. And if you can't qualify, then talk about settlement and compare that with a Chapter 13 bankruptcy. Some might consider that a con. I kind of like it. Okay, so the biggest, in my opinion, drawback to credit counseling or bill consolidation historically is that it's inflexible. Okay, it's just the same problem that happens in a bankruptcy of a Chapter 13 forced repayment plan that the court oversees. This is no different. If you miss a payment, you could easily lose the benefits of the whole plan. Okay, so it completely goes off the rails. And it's not something where you can miss a payment and go, oh, my bad, or call in advance in preparation of not being able to make a payment and say, I'm not going to be able to do it. I've tried everything. The payment's going to be drafted next week. It's not going to be enough. I won't have it in the account. It's over. A lot of the times, it's just not going to be preserved at that point. So you lose the interest rate benefit, you're back to where you began, and my biggest problem with that is that you committed whatever amount of time from the time you enrolled in it until that incident where you couldn't continue on. Let's say it was 6 months and your monthly payment was $600. You wasted $3,600 on a solution that didn't work, right? So the inflexibility is the by far and away biggest drawback or con to bill consolidation. You want a dependable source of income in order to enroll in one of these plans. And if you don't have a dependable source of income and you don't have anything that you can fall back on like savings, it's probably not a good idea to enroll in one. Doing bill consolidation through the nonprofits, one of the pros is that it doesn't hurt your credit. But here's the other part of this, okay? It doesn't show up as a late pay or anything like that to drop your credit score, but the accounts get closed. So when you enroll these 5 accounts, we're following that example, all 5 of them, let's say they're credit cards, they're closed. And that means that whatever history, forever how long you had those cards, let's say all of them had been open 8, 10, 12, 14, and 16 years, okay? You're losing that depth of credit history. Maybe that's too aggressive. Maybe they've been open for 3, 4, 5, 6, 7 years. So when you lose these years of depth in your credit, it actually will impair you on a forward-going basis because you'll be missing that. Some of your credit history in that depth actually helps factor your score. It's not a huge part, it's not a huge element, but it's something that I should point out that you lose. You might want to select one, oftentimes we think about, okay, let me get the lowest interest rate one because it still has a balance that I'm trying to pay off. That's the one I'll keep out. It might be a better idea to keep that 7-year or 18-year-old account out of the plan too. One other aspect of the fact that you're enrolled in a consolidation plan is that those accounts that are enrolled often will show up on your credit report as part of a DMP. And that means other creditors, potential lenders that you might go apply for credit through, can see that and go, oh no, what they might not lend you, in other words, if you've just enrolled in one of these plans. However, if you've been on it successfully making your payments for 1 to 2 years, you can still refi a mortgage, oftentimes go get a car from a car lot at some of the best rates, because your score didn't suffer. The fact that you're on these plans, though, might be something that comes up in the first year or two of while you're enrolled in one. Okay, well that kind of wraps up the basics of the pros and cons of consolidating your bills using a nonprofit credit counseling agency. Again, you have to really talk with one and go through that budget counseling session. It takes maybe 30 minutes to an hour sometimes, but it's well worth the time invested. 1, it's free. 2, the outcome is you want to get an exact down to the penny quote of what your payments can be consolidated into, what your monthly payment can be reduced to, and know then and compare that with what you've got going on, if it's affordable, if you can commit to it, it's the right thing to do, or if it's just out of reach and you can move on to other alternatives. See you on the next video.